About 10 minutes left here with the Dow trading up 152 points. Art Cashin just told us before the break that the market on close orders show an imbalance to the sell side by $150 million. So not a lot. And it may already be in the market here as we've come off the highs of the day here. Tom Lydon's with us here from ETF Trends to talk about the market. Where are we seeing? Are we seeing inflows in anything right now as far as equities go?
Yeah, big numbers, Bill. So for the past year, we've seen a huge amount of money go into low dividend, high quality, large cap stocks. The largest low volatility ETF lost almost $1 billion on Monday and Tuesday. On the other side, we saw huge money come into small caps, mid caps. So there's a shift that's on. We're going to see what the numbers look like today.
Right.
But it's interesting because these change in flows can really tell us a lot.
So what are people betting on here?
Well, it's risk back on. And now we've seen major indicators go above their 200-day moving average for the first time in a while. Adds more confidence. I think people are settled in knowing that the Fed probably is going to hike, and that's okay. Better for bank stocks, so we're seeing flows into bank stock. Gold also $150 million the last couple of days too.
Inflows.
Correct.
Yeah. I wonder if they're getting in late though. The rally seems to be over, at least for now.
It's been a good trend, that we've seen, and again, gold, dollar, that's all matching up.
Flows chase performance. That's what they say, right? Gold had its best first quarter in a while, but I want to get off that for a second. Yeah. It's interesting that people are adopting more of a risk-on mentality as we're heading into another potential rate hike. Again, do you think this reflects maybe the sentiment since we've come well off those Feb 11 lows? Or do people think, hey, they're raising because things are stronger and better and I want to bet on cyclicals?
Well, earnings weren't as bad, for one thing. Number two, people are waiting for that hike to finally kick in. They just want to accept it. So I think that type of mentality right now is important. As far as the markets are concerned, the trends make a big difference. There are a lot of people that are technical in nature, that are opportunistic, and when you see a major breakthrough on the 200-day average on all the major indicators, that's really key.
What about these hedging ETFs, where you double down or they short the market, even with leverage? How are they doing right now?
So actually, the volume has gone up 4 times just in the last 3 years, and smart people are using them. They work. They do exactly what they're supposed to do, but you have to be there every day. You can't buy them and forget them because they're not going to do.
Hold strategy.
No, that's absolutely. So smart investors, advisors, institutions surely are using them. There's a place in the ETF space for them, but not for the average investor.
I'm not sure if we should say smart or sophisticated
is probably a great word there as well.
Because you're basically betting that you're going to wake up and know which way the market's moving that day and be able to profit on it.
If you want to get an asset class very, very quickly to a high rate, 2 times, 3 times leverage works if you know how to use them.
Small caps, you mentioned that. Yeah. I know at least a couple of traders here are watching, like the Russell, waiting for confirmation that this market rally is for real. But you seem to be suggesting that some of the investors in ETFs are already betting on that.
Well, they've been conservative. Low volatility, high quality has been the place to be, for sure. However, small caps, mid caps have underperformed for the last couple of years. It always reverts back to the mean because over the long term, small caps, mid caps outperform. We're seeing that in flows just recently in the ETFs.
Just a final question. What about trends for the asset class? What do you think's next on the horizon here for ETFs?
Healthcare, all of a sudden, surprisingly, the worst performing sector so far year to date has started to see flows. Some people say because of M&A activity. Some say because Obamacare has gotten a lot of news lately. But you can't argue with the numbers. 150 million in the largest healthcare ETF just on Monday and Tuesday.
Good stuff. Thanks, Tom. Great to see you.
Thank you so much.
Appreciate it. Tom Lydon from ETF Trends.